Good morning, everybody. How's everybody doing? This is the live market open for Wednesday, December 14th. I'm Yellen, Forex Crunch and Market Movers podcast, doing this show as usual for FX Street. And today we're going to focus on the last big event of 2016, the Fed decision. And of course, we have also other stuff, things that happened in markets, other things that will happen. We'll cover recent developments. Then we'll jump straight into the Fed preview. Then we'll talk about technical levels, charts and levels, of course. And we'll talk about the big auto currency of the week is dollar yen. Of course, it's always related to the Fed. And we'll cover the week ahead, the week just before Christmas, before wrapping up the show. As always, your questions are more than welcome at any point during the show. So if you cannot see the chat box alongside the screen, please go to tlk.io/fxstreet-forex-live-video. So what's going on in markets? Basically, everything's set for Fed rate hike. We'll dive into that during the preview. It's about 100% sure that the Fed will raise rates. The big question is what's next? And this tension is holding markets a bit. This morning, they're a bit slower than usual. The big event that we had last week is the European Central Bank. It went dovish, went pessimistic, extended the program, and had sort of weak expectations of inflation moving forward. Oil prices finally made the break through this $52 ceiling on WTI crude oil. They haven't gone really far, but at least so far, this OPEC accord from November 30th seems quite serious. And what does Brexit mean? British Prime Minister Theresa May said Brexit means Brexit. In any case, it means pound volatility. And the degree of the Brexit, will it be soft, hard, somewhere in the middle? That's a question that moves the pound quite a lot. Okay, so let's talk a bit about the ECB, what we had last week. The ECB, the European Central Bank, Mario Draghi reduced the QE program to 60 billion per month. That initially sent euro-dollar higher because the program currently stands at 80 billion euros per month. That will happen from April, but then we received a few other not so positive figures for the euro. Details of the program. First of all, it'll last an additional 9 months and will probably be extended further, so until December 2017. There's no more. The ECB removed the yield limit. That means that they can buy German bonds that have a yield of under minus 40 basis points. Basically, the ECB gobbles up everything. Okay, so that's another bearish sign. Another thing is that they've produced forecasts through 2019, okay, and inflation is still expected to remain very low. So it's quite pessimistic. So euro-dollar eventually took a dive, did not challenge the very lows of 105.20, and since then has recovered, but it remains in the lower end of the wide range. Okay, more data that came out, basically positive figures from the US consumer confidence, also the University of Michigan's figure advanced, so that's good news. UK inflation rises to 1.2%. That's important for tomorrow's rate decision in the UK, but industrial output was a bit weaker, so a bit of mixed data. In China, industrial output was very stable at 6.2% as expected, and stability was also seen in the German zooeconomic sentiment. So basically, we didn't have too many top-tier figures so far. We do have a few just before the Fed and afterwards as well. The focus last week was in the ECB, this week on the Fed. Okay. And now for a preview of the Federal Reserve. The big question is what happens after the hike, when doves fly. Janet Yellen and the dove feature our cover for this decision. So a bit of background. So the Fed is expected to raise rates today, December 14th, 2016, 1 year after the previous hike. It's a very, very gradual move, as gradual as possible. It was well telegraphed many times. Remember that Yellen told us that the case is strengthening, that the case has strengthened once again. That was September, that was November, in appearances in Congress, in the rate decisions. So, and other Fed speakers also said this, so it will not be a surprise. If we move back a bit to last year, last December, I said it's the second hike in a year. Then last December, the Fed told us through the dot plot that it had a forecast, not a commitment, but a forecast to raise rates no less than 4 times in 2016, okay? But this rate hike was delayed due to a slowdown in the first quarter. Growth was very poor, just around 1% annualized. In addition, we had in the spring this kind of blip in employment, this scare that US employers were hiring less people. This has gone in the third quarter. We're back to okay growth, not too exciting, but good enough. And that's when the Fed began hinting about a rate hike. In addition, we were talking before the US elections. Here you can see a picture of President-elect Donald Trump with Janet Yellen. Well, I think it's a Photoshop thing, but anyway, that we said that Trump's election would perhaps trigger a trade war and would stop the Fed from hiking. Well, since then, markets have adopted a different narrative. Markets now think that, see the optimistic side, take the optimistic view that Donald Trump will push for fiscal stimulus, tax cuts, and infrastructure spending with the Republican Congress, and will not start a trade war. Everything's optimistic. Financial markets are calm, and when financial markets are calm, the Fed can proceed with a hike. That's the narrative. That's why the dollar has strengthened quite a lot, with more rate hikes expected in 2017. And that's the big question for this decision. Not the rate hike today, but how many times will the Fed raise rates in 2017? Are they more optimistic or more pessimistic? So today we have a big rate decision. We have not only the statement, but we have also forecasts and the press conference. So let's begin with the statement. First of all, it will announce the hike. And I think we should focus on inflation expectations. So if we look at bond markets, inflation expectations are higher, of course. Will the Fed acknowledge it? Probably yes, because that's reality. But will they talk about long-term inflation expectations as still stuck? That will be a bit bearish. Will they say that things have significantly changed? That will be more bullish. What will they say also about wages? Wages are critical because if we're getting closer to full employment, then we should see wages rising. We should see pressure in the labor market, less workers to pick from. That means employers have to pay more, okay? And we'll have to see if there were any dissenters. That'll be a bit more anecdotal. This one could be unanimous. In the past, we had two, in September, we had 3 dissenters, and in November, just 2. They were on the hawkish side. They wanted a rate hike. I don't think this time we'll have any dissenters because the hawks will be in line. Okay, that's the first part. Second part, released also at the same time, at 7 p.m. GMT. Okay, 2 hikes in the dot plot. Will we have 2 hikes in 2017? That's what the current dot plot shows. The current dot plot is from from September. It's released only once every 3 months, once every quarter, probably unchanged. The Fed will probably not like to rock the boat. But we should also look, of course, if it rises to 3, it's more bullish. It'll push the dollar higher. If it's only 1, it'll push the dollar lower. Again, the Fed is usually very cautious. They will probably not want to change, at least for the closer future, for 2017, they will not want to change the dot plot for 2017. They might change the longer end of the range, and they might change their inflation expectations in reaction to what's going on in bond markets. That reacted, of course, to the election of Donald Trump. Also, watch out for growth and employment figures. I don't expect big changes, but remember that any small change here will be watched very closely because markets pay a lot of attention to the dot plot, and they move, even though the Fed tries to downplay this document. Okay, and the third part is Yellen's press conference at 7:30 GMT, half an hour later. What is the tone? In many cases, she keeps us asleep. She tries to smooth any kind of message in the statement. She could also strengthen the statement or reverse it. So if, let's say, the statement sounds a bit more hawkish, we could hear a bit more dovishness from Yellen, or at least some kind of smoothing. Okay, so the event is not over, even though we get the statement and the dot plot at 7 GMT. Half an hour later, we have an hour-long press conference. I don't think she'll say anything radical. She has enough experience. She knows how to dodge questions about politics, and there will be, of course, questions because that's the big issue. But of course, I expect her to have a message of data dependency. Okay, so here are 3 scenarios, basically. 3 scenarios. Good morning, Jax. Scenario number 1, being data dependent, very, very cautious. That's a high probability scenario. Wait and see for Trump. Remember that Donald Trump is still president-elect. He's not in the Oval Office quite yet. Okay, so it'll be more of a, well, we'll react to events as they happen. No need to change our forecasts until we know what happens. Remember that all politicians make lots of promises. Donald Trump specifically has many contradictory statements in his recent past, so we really don't know. Caution is warranted. In this case, well, we had the dollar rally on expectations for more rate hikes in 2017, and we could see some kind of a buy the rumor, sell the fact. Of course, if we look at the past 2 days, we've seen euro dollar strengthening, for example, but in the bigger scheme of things, the dollar has strengthened quite a bit. So I see it moving slightly lower, especially against the euro and against the yen, 2 currencies that have weakened quite a lot. Okay, so that's the baseline scenario, which means limited moves in general, because that's mostly priced in, that the Fed will not tell us anything groundbreaking, earth-shattering. Okay, so euro and yen, I believe, will have the biggest movements, perhaps more in the yen than the euro. Now let's talk about the other scenarios. Let's say that the Fed reacts to Trump, or reacts to the bond market's reaction to Trump. That means higher inflation expectations. They could point out, they could focus, see the glass half full, talk about wages going in the right direction, which they can say because at least of October's NFP report, where it reached 2.8. I put a lower probability for that. In this case, where they're more optimistic, even push the dot plot up, we could see a wide rally in the dollar, especially against the pound and the Canadian dollar. These 2 currencies have had their big moves to the upside, okay, in recent weeks. The Canadian dollar because of oil, and the pound because of hopes for a soft Brexit. So this is our second scenario, an upbeat Federal Reserve. And the third scenario cannot be ruled out, is that the Fed goes dovish, because the Fed is dovish. That's how they are. Ben Bernanke, Janet Yellen, they prefer to do too much than not to do enough. They could see the glass half empty on wages. Of course, again, you can take it any way you want, because wages, for example, in the report for November slipped back to range 2.5%. And you can always find good and bad data points. They could see the glass half empty. One real thing is that the dollar strength has already tightened. Sorry for this noise. That the dollar strength has already tightened conditions. Okay, that means tougher and a tougher environment for exports and lower inflation. They could cite trade worries, international developments. They will not say directly that Trump is going to destroy relations with Mexico and China on trade, but they can talk about uncertainty about international developments. And remember that Trump wants Yellen out, and I don't know if she will try to stage a vengeance, but you never know. In this case, anyway, if the Fed is just dovish, its natural dovish self, the US dollar could fall, especially against the yen. Okay, the yen, remember, still safe haven currency, and dollar yen made a huge advance. If you look only at election night, from 101 to above 115. Last time I looked, we'll look at the charts quite closely. So this is the third scenario, cannot be ruled out. Okay, let's conclude our Fed preview. The bottom line is the Fed is going to raise rates, no surprise there. from the range of 0.25 to 0.50 to a range of 0.50 to 0.75. Big question is 2017 and onwards. They are unlikely to change predictions. That's the highest probability scenario. And this will push the dollar probably a bit lower against the euro and the yen. If they're upbeat, the US dollar could rally, especially against currencies that have rallied recently, the pound and the Canadian dollar. And if they are downbeat, dovish, see the glass half empty, the greenback could fall, especially against the safe haven yen. Okay. Again, probably no change in the dot plot, 2 hikes for 2017, but watch out for the tone and hints about implementation. Remember that last time they talked about last rate hike in 2015, December 2015, they talked about 4 rate hikes, and we're going to get only one today, just as the year is about to end. Okay, that's our Federal Reserve preview. Big event today, the full shebang with the dot plot, forecasts, press conference, and of course the statement. And now let's look at the charts. Let's look at the major pairs first. So euro dollar, here we are with euro dollar, 106.36 at the moment. Lines that I'm watching in the near term here at 106.60 and 107.10, which was a historic line, and above that 108.20. We only had a temporary breach of that line on the ECB event. Looking down, 105.70 is the immediate line of support, sort of a small separator of ranges, and the big line is 105.20. The low seen last December, we had a small dip under that line on the results of the Italian referendum, but we never went below that line. So these are lines to watch. Below that, we have 104.60, low seen in March 2015. Pound dollar, 126.67 at the moment. If we zoom out just a bit, we can see basically the pound had a nice recovery. Resistance at the initial post-Brexit low, 127.90. Above that, we have 128.50 and the round number of 130. To the downside, 125.30, which worked as resistance more than support, and 123.80, and of course 123, a strong line to the downside. Dollar yen seems unstoppable. Look at this very nice trend, 115 at the moment. Reached a high of 116. 116 used to be a line in the sand for the Bank of Japan early in the year. Still remains high, strong resistance. Above that, we have 117.50 and 120, the very round number. To the downside, we have more recent lines. 113.80, a bit weaker than beforehand. 112 used to be a line, 111.40, 109.80, and 107.50. Look at this big move in dollar yen. Remember, if the Fed goes dovish, we could see a reversal. Anyway, I had quite a ride here. Dollar CAD, of course, moved on the OPEC decision on strengthening oil prices. 131.20 at the moment. Resistance 132.65, 133.80. That worked nicely as support. 134.80 and 135.60. To the downside, we have, well, currently we're stuck here at 131, and if we look lower, of course, 130, which is a very round number, and 128.30. Aussie dollar, one of the more frustrating currency pairs of late, hugging the 75 level at the moment. Looking up, we have 75.80, which worked as support, 76.50, 77, and 77.40, which is already a stronger line. To the downside, it's very, very choppy waters, but I would mention 73.75 and 73 as a very strong line. Under that, we have 72. Kiwi staged a nice recovery from the lows. It already dipped under 70, currently at 72.12 as we speak. 72.65 worked as resistance, is the immediate line to the upside. 73.60 follows 74.10 and well, 75 high in the sky at this point. To the downside, 71.80, 71, the round number on 70, and under 70 we have 69.50. And last but least. Swiss franc, dollar Swiss, 102 still remains a strong line of resistance despite a temporary breach. Above that, we have 102.90. Currently, well, the line of parity, of course, works as support. Below that, we have 99, 98.50, and 98, a very tight range over there. Currently, the range is between parity to 102. Okay, that concludes our major pairs. See your question from Jax. Do you think the pound is leading currency now, or is it getting dragged around by the dollar yen and the euro? That's the question. I think it is a leading currency because, first of all, we have lots of events going on related to the pound in markets. Secondly, all the political talk about a soft Brexit, hard Brexit, I think it is quite significant. So it does move the pound quite a lot. The pound certainly has life of its own. We'll talk later about dollar yen, our currency of the week, which has a bit less life of its own. But I think the pound is certainly a dominant currency. Of course, today everything is all about the Fed, but tomorrow we have a rate decision in the UK in general. The pound is a big is independent. Okay. So let's move from the majors to the crosses. Let's begin with Euro Swiss, 107.50. 107.60 used to be a line in the sand for the Swiss National Bank. Remember, they intervene all the time on this currency pair. On the low end, we have 106.80. Looking up, I would say that the normal range for the pair is 108 to 110. Lots of choppy lines in between. 111.20 is high resistance. More interesting crosses here. This is Euro Pound, very relevant for British expats here in Barcelona. 84.20. Currently, the range is 83.35 to 84.20. To the top side, it's followed by 84.60, 86, and then 86.50. To the downside, we have 82.50 and the round number of 81. Again, we are seeing moves here dominated by the dollar, but also the ECB and the Bank of England, of course, have their say in this pair. Euro yen, quite a rally to the upside. The weakness of the yen is seen here. Support at 122.20 at the moment, followed by 123. 123.70 is high resistance. Looking down, 121 is certainly a strong line, followed by the round number of 120, and 118.50 is a strong line of support to the downside. Okay, and one of retail traders' favorite currency pairs, pound yen, currently 145.80, seems unstoppable. Soft Brexit plus yen weakness sends it higher. 147 is resistance. Low support 141.75 there, which capped the pair for quite some time. And when this line was broken, we never looked back. I would add another line here, 143 as support. Currently, we're on high ground here. Let's see if things change after the Fed. And we'll conclude our crosses segment with a non-currency, with the price of WTI crude oil. Finally, we had the break above. If we zoom out to the daily chart, we have the break above the 52 level. Look how it worked several times as resistance, triple top if you wish, and finally broke higher. The new high, the cycle high, the highest since July 2015 is 54.50. Okay, so 52 to 54.50 is the current range. Higher above, I would mention 56.20, but we're still seeing a lot of hesitation. Markets are a bit skeptical. Sorry, 56.60. Markets are a bit skeptical about the implementation of the OPEC Accord. If we look to the downside, 49 is a strong line, and it's followed by 46.50, 44.50, and 42. Okay, so that concludes our crosses segment. Questions? All right, so let's continue to our next segment, talk about upcoming events this week. And it's not only about the Fed. So immediately, we'll have the UK jobs report. Watch out if jobless claims are up. We're seeing a contradiction between the immediate jobless claims, for example, for November this time, and then the unemployment rate and wages for October. US retail sales at 1:30 GMT, usually a top-tier event that rocks markets, but today the focus is on the Fed. We also have PPI. I think it still matters, retail sales. It will not impact the Fed, but it will still move markets. And when the dust settles from the Fed, the US retail sales will still have its impact. Remember, the US economy is about consumption, so don't ignore this figure. Then we have industrial output later on and the regular oil inventories. Let's see if oil can push higher or not. And of course, we had the long preview about the Fed. So I made a mistake here with the time. It's 7 GMT and 7:30. Sorry about that. 7 is the Fed decision itself, the dot plot, and the statement. And Yellen begins her press conference at 7:30 GMT. Join us for live coverage on FX Street. It should be lots of fun. Tomorrow, of course, we'll have reactions to the Fed decision. A huge event, of course, which always has a second impact in the Tokyo session, then in the European session, then in the new US session. But in addition, we have the Australian jobs report. We've seen a few good months of gains. Let's see if this continues. Australian dollar has been a bit frustrating. Early in the morning tomorrow, we have the Eurozone PMIs. Recently, they have less impact than beforehand. At 8:30 GMT, we have the Swiss rate decision. Happens only once per quarter, but still not so exciting because because it's they usually don't make any changes until they do it. They remove the peg, and then it's a huge move. Sorry. And at 9:30 UK, retail sales should move the pound, but once again, retail sales, as in the US, are overshadowed by the rate decision. Rate decision at 12 GMT in the UK. I don't expect anything. Should be quite boring. Their big decision was in November when they changed their stance from dovish to neutral, pushing the pound higher. Now I don't expect them to make any change. There's no quarterly inflation report. It could well turn into a non-event, even though they could reveal something new in the meeting minutes. I believe they will not rock the boat. I don't expect any big moves in the pound, but you never know when markets don't expect something. We can have surprises. So that's in the UK at 12 GMT, rate decision over there. So quite a few top-tier events tomorrow as well, and also today. And more on Thursday, US inflation, CPI, jobless claims, as every Thursday. CPI, of course, comes after the Fed, but we'll still want to look at the trends. The Fed Philly index and the current account all at the same time, 1:30 GMT, so it's quite a big event. And for those trading the Canadian dollar, we have a speech from the governor of the Bank of Canada. And on Friday, we have final CPI in the Eurozone. It comes a week after the ECB, so it shouldn't be that important. It's also final figure, but sometimes we have surprises over there. And to finish the week, we have building permits and housing starts from the US. They can offset each other, cause confusion. The bigger events, of course, are Wednesday and Thursday. Friday will be a bit more quiet, more impact from the Fed, perhaps more time to digest what's going on. Okay, so that's the upcoming events. Question here from Jax. Will the USD continue to strengthen through the holiday season? I'm not sure. I think a lot depends on the Fed. The easy answer is the Fed. We might see, as the US dollar had a lot of strength during this year, we might see, especially towards the end of the year, we might see some kind of unwinding. Given if everything else remains equal, we might see some kind of unwinding, some kind of USD weakness, and then a renewed strength in the new year. Remember, we have end of year positioning, okay? Let's continue. This answers your question. And our currency of the week is dollar yen. Dollar yen, a very popular pair for institutional traders, less for retail traders. So the Bank of Japan can be happy. This is Governor Kuroda with his happy face. Dollar yen is on much higher ground. A weaker yen means more competitive Japan in exports, competitive against the big rival China, because the yuan has weakened, but it has the yen has weakened much more. So if you compare the yuan with the yen, it's much more favorable for Japan, and it pushes inflation a bit higher. So there's no need for helicopter money from the Bank of Japan to monetize government debt. And also the Bank of Japan that announced a new policy in September had a chance to implement it thanks to Donald Trump, thanks to falling bond yields. They intervened in markets, and it's not only talk, they actually stabilized 10-year bonds at 0%. That's their new policy. That's the good news. Now, the bad news comes from, here's Bank of Japan can be unhappy, and unhappy Kuroda because inflation is still too low, not going anywhere fast. TPP, it's more a government issue. The Trans-Pacific Trade Agreement is mostly dead. Donald Trump, well, it had a lot of opposition also beforehand. And Trump, that's one of his more clearer messages. He does not, all his messages are clear, does not want to enact it, to sign it. So it's mostly dead without the United States. And government reform is still slow. That doesn't help inflation too much, okay? Now, in 2017, if we look forward with our currency of the week, dollar yen depends most importantly on the US dollar and on Donald Trump. Why? Because in Japan, there's limited scope for further action from the Bank of Japan. Okay, there's also limited scope. Why is there limited scope for action from the Bank of Japan? Because they already made their big policy move in September, and they usually wait quite a long time for it, for the results to show up. There's also limited scope for significant government action, because, well, without a trade agreement, and we haven't seen too much. So what matters more is the policy coming from the US, from the government, from Trump on trade. That makes, of course, a big difference for Japan. And, of course, fiscal stimulus, the same policy from, also policy from Trump, that impacts, of course, the Federal Reserve and the next moves, the next rate hikes. So for at least for the beginning of 2017, it's all about the dollar and the Donald for dollar yen. That could be the best proxy for the US dollar, because in the Eurozone, we have elections, we have lots of other stuff. In the UK, we have Brexit. You name it. The Canadian dollar moves on oil, but Japan, I think, will be more quiet, and it'll be much more dependent on the Donald and on the dollar. Okay. Question here from Jax. You don't think the dollar strength is to help in the holiday retail market and more about the Fed? I think the Fed's move will have a long-lasting impact through the holiday season. Of course, we might see some positioning beginning next week, but I mean end of year positioning, but yeah. Okay, now let's really move to next week, the preview for next week's events, the week of Christmas. So the week of December 19th to 23rd. First of all, we might have more Fed echoes, more analysis pieces over the weekend, analyzing the Fed from John Hilsenrath and co. So that could have more of an impact. But on Monday, we also have, at least here in the Eurozone, the German IFO business climate. That could be interesting for the euro. On Tuesday, we have focus on the Pacific side. We have the Australian fiscal outlook, meeting minutes. So big night for Australia. And the Bank of Japan's rate decision, no changes expected. Again, as talked, the United States has more impact on the yen, dollar yen than Japan. And for those trading the New Zealand dollar, we have the milk auction, which has been very, very positive of late. On Wednesday, next week, we have the crude oil inventories, as usual, every Wednesday, and GDP from New Zealand. Again, an important week for the Kiwi and in general for commodity currencies. And Thursday, that's the big day in terms of key events. We have the final GDP from the United States for the third quarter. It was more upbeat last time, 3.2, up from 2.9. Also, durable goods orders, which already feeds into Q4. Investment, important for the Fed. For those trading Canadian dollar, we have retail sales and CPI double feature, and the Fed's favorite inflation figure, core PCE price index, which has hardly moved in recent months at 1.7% year over year. On Friday, just before Christmas, we have the UK final GDP. Again, Canadian GDP and US new home sales. And on Friday especially, it's going to be the end of the week, just before Christmas. For many, it's a long weekend. Most places, it's a long weekend. So we might see these end-of-year moves. Will the dollar strengthen on these moves? I suspect it could weaken a bit, but we never know. Again, a lot depends on the Fed. Okay, so that's a preview for the week of December 19th to 23rd. All right. Hope that answers the question. And this is the wrap-up for the live market open for December 14th, Fed Day. Everything, it's lots of tension towards the Fed, hardly any movements in markets. That's left, right, and center. So apart from that, let's talk quickly about the Fed in this wrap-up. We expect, if we conclude everything is about 2017, we're going to get a rate hike today. The Fed is unlikely to change its predictions. That's the baseline scenario. Going to really wait and see for Trump. The keywords are data dependent, and that could allow some profit taking on the dollar. That means a slightly weaker US dollar, especially against the euro and the yen, which have weakened recently. If we have other events, the scenarios are an upbeat Federal Reserve, looking at bond markets, looking at the potential fiscal stimulus, and seeing the glass half full of the US economy. We could see the US dollar rise, especially against currencies that have strengthened recently, the British pound and the Canadian dollar. If they're downbeat, if they're dovish selves, and something we can't rule out, we could see the US dollar falling, especially against the Japanese yen, which is a safe haven currency. I don't expect a change in the dot plot because that will be a big move, and the Fed does not want to rock the boat too much. But watch for the tone. Are they more optimistic, more pessimistic? Changes in growth forecasts and hints about implementation. Remember that last time the Fed hinted, well, they said in the dot plot that they'll raise rates 4 times. And in reality, we're going to have only one single lonely rate hike today. Okay, so that's the big event, big focus of a wrap-up. Other things that happened in markets worth mentioning in a wrap-up is the ECB went dovish, weakens the euro. On the other hand, OPEC went bullish. Oil prices are higher, and the Canadian dollar drags along. Politics dominate the British pound. What does Brexit mean when Theresa May says Brexit means Brexit? That's the big question, and that moves markets quite a lot. Okay, let's take a quick look at the charts. Euro dollar currently not much changed on the day, 106.15. Levels to watch here, 106.60, 107.10 to the downside, 105.70 and 105.20. We could have big swings after the Fed. Pound dollar lines to watch, 127.90 and 125.30. Dollar yen, 116, very strong line of resistance, 113.80 support. Let's see if we have wild moves in dollar yen, perhaps the most sensitive currency to the Fed, to the US events, to US events in general. Dollar CAD, 131 and 130 lines to watch, 132.65 and 133.80 to the top side. Not much going on with Aussie dollar hugging the 75 line. Anyway, 73.75 and 75.80 are lines to watch. And the Kiwi, where did it go? Here we are, 72 at the moment. 72.65 and 71 are the big lines. Okay, let's just talk quickly in this wrap up about other Feds, which are other events, which are not the Fed. So we have today UK jobs report, still a big move for the pound. Let's see if we peaked in UK employment, retail sales in the US. Always a big event, today a bit overshadowed, but I think we'll still have a long-term impact. And once again, I encourage you, invite you to join us for our live coverage. It begins at 6:45 GMT. Of course, we'll cover the decision, analyze it, and the press conference by Yellen. And that's, of course, the big event. And tomorrow, watch out for more echoes for this event. Okay. Yeah, thank you, Mauricio, for posting the link to the event. I'll also plug my own preview for the Fed on forexcrunch.com. A long preview with even more details about the various scenarios for today's event and more background, everything you need to know. I guess that's it. So thank you very much for coming. Thanks for the great questions. Jax, I wish everybody a safe and successful trading day. Apart from the coverage of the Fed, of course, we'll have the regular show next week. We'll be here throughout the holiday season. No vacations for me. And I mean, at this time at least. And that's it, the last big event of the year. I truly believe it'll be exciting. Volatility is much higher than it used to be earlier in the year. I'm hyping myself up, but I really think it'll be big because of the high uncertainty for what the Fed will do in 2017. And just saying Donald Trump means uncertainty. And that has an impact on all markets, all asset classes. Okay, enough for now. Wish everybody success and see you later on in the live coverage. Thank you and bye-bye.